All right, charts. Yeah, we'll start off with ETH, just because I think it's the best looking chart. Oh shit, music volume defaulted. Fuck me. Thank you, Yak. Appreciate it. Yeah, so we'll start off with ETH because I think it's the best looking chart that we have currently. So what we've done here is broken out. If we just take the daily time frame and we just focus on the daily and nothing else below that for this moment in time, we'll dive into that in a little minute. But the daily is the best one for now. ETH had the most wonderful, clean, easy resistance point for the daily time frame. So we've got, this level here at basically 1250s is the level that ETH could not break clear from. And we've been trading under this level since the start of June. So this has been, a month of consolidation underneath here. We then had this horrendous daily close on the 15th, which was the Friday. And we swept all of the highs and we closed back inside the range. And then next day was the big pop out breakout. From a daily perspective, there's really nothing on this chart that gets in the way until the 1700 macro retest, right? That's what we've got along here. There's the 1700 level is the macro retest of this whole region, the single most important level for ETH throughout the last 18 months. There's pretty much nothing that stands in the way of that now this resistance is broken. There's a small cluster of supply on the lower time frames around the 1450s, which we've basically got towards in that initial push that we saw on the daily. But from the daily chart, there's really nothing that stands in the way of this up till 1700, and that would be obviously the super important retest. Yeah, that's on the 4 hour. The other very important thing from the ETH perspective is not only the breakout of the consolidation range that we've had for a month down here at the lows, it's also the first time that both the RSI has flipped over the 50 level and the awesome oscillator has crossed positive since April. So a huge period of time, nearly 3 months, where both the daily RSI and the awesome oscillator have now managed to flip positively. Every other attempt has been knocked down at that 50 level, clear rejections at the 50 level time and time again, and now we finally got a breakout. So from my perspective, this isn't shortable right now. Like I wouldn't be considering shorting ETH at this region. I think that you're looking to get long as a primary focus. I think lower time frame, and we'll cover off some of the time frame discussion shortly, but I think you're still looking at getting long because I still think there's a huge amount of value to be had from a lot of alts that are still pissing around with breakout points. I think there's a lot of value still in the market, and there's still a really good percentage move on ETH if we do go up into the 1700s. You've got the potential retest down at the 1250s again, which absolutely is an area that we can come back down into. I would rather us not get back down to that area. I would rather us continue and just push. But if we get back down to the 1250s, then I would suspect that's the level for bidding here. ETH BTC has been very strong. ETH has been leading the way on this charge, which is a really good sign if we, take that back down to kind of, the basics of ETH BTC. It's a really good signal for alts in general across the markets. And so therefore does give us, kind of momentum on the alt side of things. I suspect that when BTC moves, we'll see ETH just underperform versus, any sort of, nasty inverse correlation between the two. I just suspect we'll see the roles reverse, and, I would expect BTC to play makeup here. But if that makeup happens, then I suspect that ETH will just be a weaker performer. That's all. So I think a higher time frame for ETH, it looks very, very good. The only thing that would change that logic from this point in time is if obviously this 1450 area here sticks, and if the price action takes us back down under here, then fine. Right? Dream of that mini little bull season here is done, and then you just get short on the re-entry into the range. I think if you are getting short on this on the thought process that it will be some sort of deviation here, I think your mindset is entirely incorrect, and you're probably better off just waiting until the fact it does confirm one versus trying to, you know, go against the first time we've really seen upside momentum over the last 3 months and trying to battle against that. Like, if you think it's a deviation, fine, but like, wait until it gets back inside the range, because you're not missing out on anything. And well, you're potentially missing out on some very easy upside trades if ETH continues to hold the level. It's a significant moment for the market. A breakout for 30-day consolidation region with a 3-month breakout of both RSI and the Awesome Oscillator is the strongest sign we've seen for an upside push. The bad sign here would be BTC. BTC can play catch up anytime though. Like, we're not going to not long alts or not get long on ETH just because we are nervous about BTC. BTC tomorrow could be up 10%. Okay? Like, ETH being in the position it is, we're not going to start being like, well, BTC didn't move, so it's a concern for me, so I'm going to short a monthly consolidation breakout on ETH because I'm nervous about BTC. It's kind of irrelevant at this point in time. Like, the easy long is the 1250s, which is probably why we don't get it. And the preferred option from here is just consolidation. It's just consolidation here. So just consolidating through this region, you know, maybe tapping down 1270s as well in the lower time frames. So probably is probably a juicy zone. And then you've just got a failure point as well. So like this is like the easiest bid in the history of the fucking ETH chart, basically. It's such an obvious play here. This is the awkward area of the supply. And if this is overcome, then it's up to 1700. But this area here is such an obvious bid level. You need to consider the macro condition, earning reports and Fed hike in the next 2 weeks. Late longs will get wrecked. I mean, look, there's nothing really to like counter in terms of your points. Obviously, if that's your viewpoint, you can sit there and not take any long positions and decide to wait until, you know, the Fed move the market to the downside, if that's your belief. If that is to be true, then I'll take the short below 1250. Can you cover some alts as well? Holy fuck, we're 10 minutes in and this man is already getting frustrated at the lack of alts. Yeah, is this the most bearish chat has been? Yeah, it's kind of, I'm really pleased to see chat calling this a deviation and being like, oh yeah, we're gonna fail, this is bad. I think people are underappreciating the current setups that we're in. I really think that people are underappreciating the potential that we can move from these regions. So we're gonna go BTC. The BTC concern obviously is the diagonal running up here and trying to hold on to that. The chart obviously hasn't moved to the same degree that ETH has. The resistance is still pretty locked in around 21.5, and a breakout of 21.5 basically sets the way back up towards the 28s. Now, that again is ideal scenario. When we're looking at the higher time frames, that is the ideal scenario, is getting up towards this. If at any point during this journey towards 28 we start to see significant signs of failure or weakness, then obviously we can change the plan. But as of right now, this would be the major area to get back in and retest. And any breakout of the consolidation, which obviously has been for the same period of time as ETH has, and we're yet to see a breakout, that would trigger the long up towards as close as we can get towards 28. Same thought process as ETH. If this breaks out, I wouldn't be fading it. I would instead be looking at longing. And then, you know, look, scale out on your way up, scale out into weakness, scale out into divergences. But if this starts to push through, look, we haven't seen that breakthrough yet on BTC. We haven't really seen that strength of crossover the same way we've seen on ETH. If we get it, it's an easy play. And then, like, the big decision point comes at the big macro retest. You know, if ETH gets back up to 1700, you know, I'll be opening a very large short position on ETH, because that's such a huge retest to go through. If we reclaim 1700, very different scenario. What about your higher time frame views? Do you think the bottom is in, or do you believe it's just a bear market rally? Just a bear market rally. Do you take into account PA happening on weekends? No. I think it's a great way to cock yourself. That's always been my belief. I think it's a great way to cock yourself to potential moves. We've seen for a while that BTC and ETH have moved preemptively in terms of the traditional markets. We saw it a lot actually during, when we were selling off. The BTC and ETH would sell off aggressively on the weekends. And then when the market opened on Sunday, then traditional would start dumping, but crypto would hold up. And that's because crypto just took the opportunity to move on the weekend and therefore essentially front runs the index move. 20.5k, 20.7k ideal BTC long, given the 4-hour order block as well as holding market structure. I mean, sure, if you want to pitch for that region, then yes, I wouldn't be using that as my entry criteria, but I mean the logic is fine. The simpler logic is just play the breakout above 21.6, right? That's the easiest one. I think the dollar still has plenty of upside. Yeah, but I think it's probably done in this run. I think it's done for now. And then I think cool off, bounce for the indexes, bounce for crypto, and then return of the dollar. All right, Sol. So I think the Sol area again is pretty clear. The 4-hour region down here is the one that is sort of, continually we're still pivoting around, which is around the 35s. So a little bit lower down is like basically this pivot point that we've had for Sol all the way through this lower range. We've been really strong on Sol. We've got this potential div on the 4-hour. I don't really like it given how low it's gone here, and there's nothing that complements it from an awesome oscillator perspective. I think this is just a natural cool off in Sol until we stab at 42 again. I think if 42 goes, like this is the bullish scenario for Sol, is that 42 goes and then we have a clear attack up this side towards the 50s. The fireworks really begin if we start getting above 42. That's where I think the really nice action begins on Sol. We're still in kind of warm-up territory here from an RSI perspective, looking pretty decent, highest levels for a while, and just taking shots at this $40. But I think once that goes, this will be an aggressive push if this goes. Similar to BTC, right? Yet to see that larger breakout, even though Sol has been a very good mover this weekend. It's not as nice as something like ETH, which is, a far clearer range and therefore retest region to look at. Weekly looks like 70s on a breakout. I'd take it. Sol breaks resistance 10 to 60. I'd take that as well. Matic's a really good market to take a look at. So like the logic on Matic is basically the same logic on Sol. It's just this has already happened, right? So the thought process on this is really quite simple. It's like, all of this is the congestion area. All of this is the area that's just been kind of built up. Matic has not managed to create any higher highs until it started through this area here. And it's the same with Sol. The same price action is basically present on Sol in terms of, we see this, very heavily protected structure. And I think Matic is a very good example of something that is, that obviously is moving very heavily and is doing so with relative ease now. Resistance, I think, is around 80 cents for now, and if it goes for the same move that ETH would try and pull, that 1700, then I think Matic goes back to $1. This would be the bigger level to get back to, and obviously the round number psychology level as well. But a lot of alts look like this currently. A lot of alts look like this, and if we take the 3-day on Matic, it's a very good example of why I think people are not appreciating the fact that there's a difference. When we get bear markets, there's differences in the pumps, right? Some of them are just, squeezes based on 24 hours of aggressive upside, and then we just, BART back down the other side. Some of them are, 4 hours of squeezing before we just retrace everything and, make lower lows. We're in a situation at the moment where a lot of higher time frame alts have major divergences. A lot of higher time frame alt charts have 3-day bull divs. And this is the time in the bear market where you really shouldn't just be blindly shorting everything, assuming it's all a scam. You can more safely do that at various points where we don't have higher time frame divergences, versus a situation where things like ETH break out of a month of consolidating. Alts have 3-day bull divs, right? It's a very different structure setup for any moves off here than it is for a market squeezing with no other kind of supporting or confluent factors from the higher time frame. So I think that's why people are kind of underappreciating this region, these moves. I think the market is making things quite clear and obvious as long as you choose not to kind of be a contrarian to those points. So Matic has been a very simple setup. ETH is a very simple setup. Sol is potentially a very simple setup. But people are going to basically convince themselves that they should be shorting something, or they should be, you know, these are all scam pumps, etc. Like I said, there's a clear difference. There's a clear difference in the higher time frame structures from moves occurring now than at any prior point that we've seen in the last 3 months, potentially even longer. Most of the order flow people are fading this. Yeah. Most of the order flow people will be trading on lower time frames though. So I think it's less important. And, you know, look, I think you can take the tops off these moves. I don't think there's anything wrong with like trying to take the top off ETH and trying to short it back down for, you know, 6, 7, 8% down. My thought process is mainly focused on, you know, what do I think that the next 2 weeks are going to look like? And I think that they're probably going to continue to the upside. I think that the move on ETH is too significant to fade openly at this point in time. Granted, I don't use any order flow, but I'm not looking at fading a breakout of a month-long consolidation a day after it's happened with no other technical signal to do so, especially when alts like Matic are putting in 40% moves in 3 days. Like, it just doesn't make sense. You're missing so much value. You are literally missing out on so much value trying to be contrarian. You've had 7 fucking months to short this market. And for people to be so passionate about shorting the first time that we've seen bullish strength is insane. Just short it if it fails the breakout. It's fucking easy. Like, if it fails the breakout, if ETH fails, if BTC drops and hits a resistance and fails, like, short then. You don't need to try and be a hero now. I would agree if it wasn't for Jim. Yeah, and like, look, obviously I love Jim. I think Jim is an incredibly good trader. But Jim operates on the lower time frames, and, you know, Jim is not always correct about what the higher time frame structure is going to do and how heavy the market's going to move. I've chatted with Jim on multiple occasions where both of us have been incorrect about the views that we've had on the market, and it doesn't necessarily mean that just because Jim said something it's going to turn out that way. Likewise, does it mean that just because I say it's going to turn out my way? What I'm saying is, like, it's the first time the market's shown you something, and there's no reason to short anything here. The only time that you would be comfortable shorting is if we get back inside the range. It's so fucking simple. Right? My little 2-year-old boy could operate this trade. Right? And the fact that so many of you are going to fuck it up, it may demonstrate some of your, you know, technical ability here. You just sit him down and say, listen, son, if price comes below this big green line here, tell daddy and I'll press the short button. Right? That's it. Okay? And then you guys are going to be like, oh, well, institutional order flow, it looks like this is a pretty good setup for a 25x short here, and Jesus. CRV is another market that doesn't have any divergences, but actually has been pretty strong throughout this way. I would disagree, and I do say it has got a divergence across the highs here. So this is kind of the awkward part. I'd say you have got a divergence here, especially on the awesome oscillator. It's the same setup as sushi. So this setup here is basically the same as the sushi setup, and it's the same as the last highs on CRV through here as well. So actually these have been responded to previously. There's pretty good detail in terms of just, you know, the last highs that we made through here before the correction, and then movement into the fresh highs again. So you do have the div. You've got the div on sushi as well here. It's the same setup. The awesome oscillator doing the same thing. So some of the DeFi stuff is showing signs of the 4-hour putting in the divs, and therefore we would expect a bigger correction. Second part of that obviously then plays into the ETH thought process, which is if ETH comes back down for the retest, then obviously everything's getting pulled with it, and then that's the regions that we would start looking for the long setups. And with something like CRV, you know, really This level here, the kind of $5, $6, you would want to hold. If it's lost, you would expect it to recover back above very, very quickly. So this region here, we would expect anything that dips below this to recover very quickly. So since it has a div, shouldn't we be focused on the 50 reset, or should we just look at other markets? I think you can look at other markets. I think CRV is a great market to keep in mind because it still looks very good overall. But absolutely, you can switch to a different market. Yeah, so sushi representing the same thing, right? And then you're looking for the retest back down at the 130s because that's just the that's the breakout region here. It's the 130 level. So that's what you're looking for. Nice simple trade. I do want to see the awesome oscillator cross. I'd rather see this flip over and then try and take the position on that. Oh yeah, and I'm not looking at shorting. I'm not looking at shorting. Like I said, I just don't think it's worth it with ETH being in the position that it currently is. What are your thoughts on ETH's rejection at its 2018 all-time high? Irrelevant. Because I think, like, what would be the logic for the market stopping at that point in time 4 years later? Like, there's no real logic for that, for ETH to stop there, right? Yeah, let's take a quick look at Aave, because that is a nice chart, and obviously one of the Wolf's boys. So Aave setup, similar to CRV, similar to Sushi. Right? Those three kind of just operating with the same thought process. The 4-hour divergences across the last highs, a lot smaller on Aave, but coming back down to the 50 level, and this one's actually ahead. So this one is slightly ahead of the other markets in terms of where the RSI is currently positioned. Aave was one of the first movers and therefore has been consolidating for longer. Div here, and obviously div on the RSI if we want to call it that from these highs. I think the reaction and what happens on Aave will set the scene for CRV and Sushi. I still expect that Aave will try and move first. And so I think Aave is a good market to monitor to see what the reaction is going to be like. Moving back down to the 81s would be an interesting region. Little demand cluster here around 79, 78. And then obviously the former highs through here as well. So would be looking for Aave to try and hold on to this 80 level, maybe a couple of dollars below. Looking for any specific weekly close on BTC, or is it irrelevant in this position? I think it's irrelevant right now. You know, this week has not been BTC's week. Right? It's been the ETH weekend and the alt weekend. And we know those situations, they change pretty easily and pretty readily. And we've seen a lot of BTC, alt BTC pairs, you know, power through on the charts like ETH BTC. And like we discussed at the start of the stream, the way that those charts often cool off and chop and consolidate or correct is also via the underperformance of the alt versus BTC. So it doesn't necessarily mean all alts are fucked now, because, you know, BTC is going to steal all this liquidity suddenly. The majority of times that we've seen it, especially during the bull run, the majority of times what we saw was BTC leading a move instead, BTC taking the reins, and BTC might be up 7%, but ETH is only up 3% on the day. And that's the way we start to correct on the BTC pair charts. I haven't looked at an AVAX chart in a long time. So it looks like a 3-day breakout here. Is the daily just going to be in a nice range here? There, 21.4. That's the supply just above us here. But again, similar setup to Matic, you know, the way that we were speaking about, or that arrow was just crudely drawn over the top of these highs. Just say, well, when we start breaking out, we tend to go quite aggressively through these regions. Pretty much the same picture for all alts through here. Daily RSI being at the highest level once again in 3 months. Hourly cooled off really nicely in this consolidation region here. I know, retest back into 20, probably. There's a lot of action around 20 in terms of that being a resistance point. Very clear breakthrough. clear continuation afterwards. So anything that comes back down to 20 looks pretty decent. Atom. Yeah, Atom has also got a really nice level, which is why it's definitely worth looking at. Going one of the simpler alt trades through here. I think that ADA does as well, so we'll look at that as the trifecta of the A's. I think you have to wait until the high at 940 is gone, but basically you've just got resistance and support through this region, you know, call it a 5% region through here, but this is where your support and resistance is largely happening. So I think if you want Atom, once again, it's the same as every other alt with this sort of, you know, consolidation region down here or this sell-off region down here, and you're just waiting for us to close a daily above 940. It's probably the clearest signal that you can get here. RSI is in a good position. Atom moves slightly better than actually a lot of alt markets did, and so it's actually managed to put in a better level from an RSI perspective a lot earlier than other alts have. What does high RSI 60 plus but lagging yet positive Awesome Oscillator indicate? Nothing. These are mirrored. Right? These are the same. There's no difference here. Like the RSI is essentially a lower peak, the Awesome Oscillator is a lower peak. It's the same. Do you believe the narrative that ADA will flip the entire crypto market cap and Charles will be the US president? That's one of the things, yeah, I have thought about that actually quite a lot. I think there's a very high chance of that happening. A very high chance of that happening. I did chat about ADA, and I did say it's a relatively interesting chart. The reason it is an interesting chart is all the boys that are screaming deviation for the ETH upside break can also scream deviation for the downside ADA break. So I think that if ADA can manage to stabilize and push away from 44, then there's a pretty good chance that this was a move below the range support and then back above. It's been a fucking terrible performer during this period of time. You know, God bless you if you have been stock long on ADA when everything else has been popping off. But if this can manage to push and get some impulse away from this 44 region, it's a pretty decent shot because you've got great invalidation here. And also it's things like Hombre says here, I don't see any bullishness in this ADA chart. You don't have to see bullishness in any chart, but if this market as a whole universally turns green, and if BTC rallies 10%, you can absolutely bet that ADA will rip at least 10-15% minimum. So that's the only thing that matters. Like all of this shit is just going to do the same as each other, right? It's just we always say it's one massive inbred family, and it doesn't fucking matter what a chart looks like. It's going to pump if BTC pumps. Like everything's just fucking each other all the time. That's it. So Gala is just, you know, one big descending market structure, just garbage downswing. A few challenges to the upside, which have been pretty healthy in terms of, you know, overall size that they're putting in from these moves. Yeah, high to low, 43%. What have we done so far on this one? 22. What do we do here? 35s. I think that Gala still makes a move. I think it's a relatively decent market to keep an eye on. I think it's slowing down in terms of the aggression that we've seen through this region. And again, it's one of those markets that's just primed to try and attack something along this side. It's slightly harder because Gala has less in terms of clearer structure. The one area we would be looking at is just holding above 5. So if we drew this under here, it's basically the ADA daily chart. And so holding above this level would be a pretty decent start here. As long as we can hold on to this, then obviously we're looking at then the challenge to the upside. 5-7s being the first area, and then back up towards the 6-9s, 7s would be the ideal one. So pretty decent market to move. And if we see Metaverse go as a whole, then obviously this is going to perform pretty well. Same with Mana. The structure's actually been okay on Mana. it kind of has started to slow down a little bit sooner. It's done pretty well in defending the original low that was created back in May as well. So it's done a pretty decent job of holding up. But again, it's one of those markets that's yet to really move off the lows. So another one that's good to keep an eye on. You know, if Metaverse starts popping off and we see the Sand Mana Gala play, then it's a relatively easy rotation to try and take. And the same with Sand. I think Sand's setup is quite similar to the way that Matic started to look before Matic moved. Let's see if we can get the comparison and see how far off my view process is here. Yeah. So I think this is pretty similar on the structure for Sand and Matic, and therefore would hope that Sand would also be able to put in a similar move. It's really just this pattern here that Matic obviously demonstrated before moving. And it's exactly the same obviously on Sand. We've just got this whole cluster here. So as soon as we start to attack this, then I imagine it goes very similarly to the way that Matic went. What would you be looking for to take longs on the alts we went over? Retests into the former resistance regions is number one. That's the first priority. So the structure basically goes like this. Let's use ETH, because that's the better overall chart to discuss. And we'll use the 4 hour because, I mean, you guys have got the fucking patience of a toddler. So you're not going to be looking for a daily time frame trade. You're going to be like, oh, what can we do on like the 4 hour? And even that's stretching it. I mean, Jesus. So what we're looking for here are a number of things that we try and think about for entry, and we'll consider RSI positioning, we'll consider awesome oscillator positioning as well. So what we're doing is, number one is we're looking for the retest of the breakout. That's number one. That's a pretty clear and obvious one of what we're looking for. Number two is if we do not get the retest, so that's a possibility given what we've seen in terms of the market. We're looking for reaction of RSI below / at 50. Right, that's the second thing that we're looking for. And then number three is we are also looking for the reaction of the AO above and below mid. Now, this is like a pretty easy summary of what we're looking for here. So we're looking for the retest of the breakout, which is here. So that's point number one. And then what we're saying is, well, if the market does not give us the 7-8% correction that we need back down to the very easy SR flip, then we have to react to the market. So if we don't get that, what we're looking at instead is what's the reaction of the RSI. So if ETH stays up here and does this, and the RSI cools back off to this 50 level, that's a good enough opportunity to try and get long here. And the same with the awesome oscillator. If the awesome oscillator starts cooling off like this, in line with what the RSI is doing, and we start sort of hovering around the midpoint again, maybe a small crossover, then we look at getting long. It's a very simple process at times like these. So we have retests of the major regions. If the market doesn't provide us with retests of the major regions, we're not going to freeze. We're not going to remain sidelined. We have to have an alternate plan. We have to have another method of entering into the market. And the other method would be, what is the RSI doing? Because the RSI consolidated for a long enough period, and therefore can I enter on any breakout? Now, what will usually happen during this period of time as well is that you'll usually get some form of resistance level formed in the lower time frame cluster through here. So if the RSI is going to rotate back down to the 50 level, that's probably going to be our resistance point. So once again, you've even got double thought process here around the 50 level. So you can either say to yourself, well, I'll enter if the market starts pushing away from the 50 again. and maybe I'll double up my position. I'll take 50% on the push away and 50% when we break out of this consolidation cluster through here. So you just have to react to the market. Don't assume the market's going to give you the easy trade, so always make sure that you've got plans for multiple sides of this market. What if all three go up? Or all three what? You talking about like price, RSI, or oscillator? Yeah, so if all three go up, you pick a different market. You pick one of the other 1,000 crypto markets, 10,000 crypto markets, and you long one of those that's got the setup you can enter. I appreciate the ETH breakout, but if you look at BTC standalone, wouldn't BTC look like a short? Yeah, but like this is the logic that I always go against. Like you can't say I appreciate the ETH breakout, but now look at the BTC chart. Like this is where this has happened, right? This hasn't happened on the BTC chart. So like I'm interested here. And if you play the correlation card, no, you can't. Because you can't do the correlation card. Because then you'll say, well, look at the BTC chart because BTC isn't doing this, so therefore that's a danger because they're correlated, right? But then I'll say to you, well, then now go look at the indexes. And after you've looked at the indexes, make sure you go look at the dollar. And so you've got to keep the correlation going as far as you possibly can. Why stop at BTC? Like, if you are interested in the confluence and the correlation, why would you ever pause at BTC? Because you know that they're directly related to the indexes as well, so therefore you have to go and look at those. So your analysis now on an ETH breakout is now across BTC, the NASDAQ, and the dollar to try and find a position. Like, you can't play the correlation card. You play the market independently. Yeah, analysis paralysis. I mean, that's pretty much it, right? Like, ignore the correlations, play the charts independently. So just play independently. You'll lose a lot of the paralysis if you just focus independently on the charts. And I have no idea why people get so caught up in the correlation argument. You know, there's so much value to be achieved from playing charts independently versus playing them correlated. Like, if you're that bothered about the correlation, just trade BTC your entire life. Because that's all you really care about, right? Is like the correlation always comes back to BTC and what BTC is going to do. And the correlation is dumb as well because everybody does exactly the same thing whenever they think about the thought process. This is what happens. You have an idea about what you want to long. Right? So you're like, I'm going to get long on this alt. It's going to do 50% upside. And then you're like, oh, wait a second, but I'll check the BTC chart first. So you go ahead and you go look at the BTC chart. And in probably 30 seconds, you decipher with 100% confidence, right, the exact trajectory of BTC. And usually in this scenario, it's that BTC is going to do this. So what you do is you throw away your well thought out analysis on, what you think is a good RR trade, what you think is a really nice looking setup in the current environment. And you look at BTC and in 5 seconds you say, that looks bad. That looks bad. I really don't like that last 15-minute candle that we had here. So I won't bother taking this trade now because I'm pretty sure this goes to zero. Like, this is the logic people have every single time. They do well thought out analysis. They look at setups. They spend time thinking about alt setups. They take one look at BTC and decide it's all over. And that they've predicted with absolute confidence this is going to happen. So much so that it stops them taking any trades here. This is why the correlation is so dumb. And alts time and time again have proven that you just trade them independently. Just trade alts independently. Just look at the watch list today. You've got stuff that's like up 10%. You've got stuff that's up 2%, up 10% again here, another 10%. LTC's up 2% green for the day. Right, CRV down 5%. Like, there's such independence in these markets right now. So focus as much as possible, if you have a good setup and you have spent time assessing a market, like take the trade. Like take the trade. Forget about BTC. And don't ever let your confidence in what you think is going to happen on BTC get in the way of taking a very good setup elsewhere. Right? You just have to be robotic about it. Because people attach this weird like sense of like, well, of course I'm going to be right in my 5-second analysis on BTC. Like there's a weird like confidence attached, and it comes from the fact that usually people are nervous to take trades, and BTC helps them because it tells them that they shouldn't take a trade, which is like subconsciously what they want to happen. It's subconsciously they want the chart to say, don't take the trade, it's too risky, you're going to lose money. Right? You've lost enough money so far, don't lose any more. And so they look at BTC as a way of helping them confirm the fact that deep down they're scared to take the trade. How do you know when to focus on the 1 hour or 4 hour for RSI 50 cooldown plays? Basically, if the 4 hour is extended, then you want to focus on the 4 hour. If the 4 hour is not extended, but the 1 hour is, focus on the 1 hour. So it's just where we sit on the 1 hour and the 4 hour setups, right? That's where we would give more strength to a 50 cool off on the 4 hour or the hourly. And also you can also roll that onto things like the 12 hour as well. We'll take a look at looks because people have been calling out for that for a while. Oh yeah, I marked this out earlier today. I think this is a really, really clean looking market. Where did I mark this from? 4 hour? Yeah, 4 hour. So I think this is a really clean looking market in terms of, 2 levels and some additional confluence around 36. So resistance here, pretty obvious at 42. You've seen 1, 2, 3, 4 rejections so far. So you're looking for any retests that get down here and between here. So 34 to 36. This is the kind of sweet spot region we'd be looking for. Nice bit of demand inside here. Nicer level down at 34, and obviously previous highs both here as well for the confluence for that 36 region. And once this is done, if this retest happens, then I would be looking for the breakout above 43 and then wherever that takes us up this side. I think this is a really clean looking market overall. RSI perspective, pretty extended, can make another push now, would ideally not want it to. Because if we make another push now, we start running the risk of getting the 4 hour divergences. So if we make a push now, we start running the risk of getting into the position where we do this. And we diverge the sort of fake out above this level. It takes a lot of strength to try and push the RSI past a level like this when we're already overextended. Would much rather see us cool off. And then if we get this, and we get this, that double confluence point, take the trade, push for heavy targets to the upside. Why does the 1 day on AO on looks show itself like this? It's basically just like the zoomed out level. It's because it's been so strong on both directions. It's just skewed the way this looks. Because when you actually zoom in, there's still been decent movement here, but it's because it's just tightened up in terms of the consolidation through here. That's all. So it's just because actually the previous selling, which has been hyper aggressive, has just skewed it in terms of where the AO is sitting now. CHR as well. Let's do CHR first. Yeah, this level again here at 17. Little mini resistance patch at 19,320. But again, another relatively good looking market, especially with the RSI doing this and momentum being good across the market as a whole. 3 day awesome oscillator divergence as well, which is great. Shame it didn't get the triple. But yeah, really good looking setup as well. That's why sushi is a really interesting one, because it has the triple. It has the triple low here, with the awesome oscillator giving you the triple div as well. So it's a really nice setup on sushi, and there's plenty of others that have this higher time frame bull div. ENS. Man, this consolidation breakout was so good. It's actually a harder market because It's kind of similar to the way that ETH was when it tagged the bottom of the range again, because ETH made a lower low and then decided to rip the opposite direction and obviously caused the range breakout. You probably want to see ENS trading above 975 on the daily, somewhere through here. It's been one of the areas on the chart where we've had the most interaction. And even though this level traded above and then fell back below, it's still been kind of the cleanest point for this bottom range kind of territory. Not one of the cleanest from the 3-day perspective, has one of the best higher time frame levels, you know, of any market around that $13 zone. But yeah, I mean, if you're focused on ENS, then I'm sure you can find a trade in here. The cool off is good. The lower time frames obviously are not extended as much as other markets because we haven't pushed as heavily. So if you can find a trade in here, then again, there's going to be no problems with that. Silver. Yeah, so this is a really good weekly close on silver. We want to see silver trading above 1850. So we haven't got any divergences yet on the higher time frames, but I think that this is a really good position to be thinking about spot silver positioning. This is the huge weekly level retest. You know, this has to hold. Has to hold. So I think this is a really nice level to be considering the silver positioning. If I'm profitable on paper trading but not with real cash, what can I do to manage my impatience and emotionality? Smaller size, like as smaller size as you can get away with it still being meaningful. Like it really, everything that to do with kind of the fear of trading, it really comes down to the fact that you're nervous about losing money. And there's also a part of it that's more of a personal psychological point, which is that nobody likes to be incorrect as a general. So typically speaking, none of us like to be incorrect in our thought process, in, you know, when we answer questions, whatever it might be, in any aspect of our lives, we would rather not be incorrect about something. And so there's a personal aspect to it, but the one that usually underpins most reluctance to trade for traders is sizing. So getting used to putting real money behind something, but something that isn't going to sort of emotionally scar you if you start losing, but something that also means enough to you to feel good from wins, right? Because if you're saying that you're profitable on paper, then obviously you want to be paid for that. I start to punish myself mentally when I take wrong trades, but like everybody loses trades. Like everybody's losing trades. The biggest thing at times like these, it's what I've kind of been preaching in the Haven, is, you know, like I hit like 40% on the Matic trade. And then I lost a link trade, but we'll keep going back in on it. So I think the biggest thing you can do in conditions like right now, right, this will change, but right now, don't beat yourself up from taking trades and losing them. As long as the setup that you had was technically viable and there was a reason for taking the trade. If you're just pushing buttons for the sake of pushing buttons to fulfill a gambling addiction, then yes, there's an issue. If you are sensible but you mistimed it, the market was more aggressive than you anticipated, you got stopped out on like a stop hunt, whatever it might be, it's really important that you can pick yourself up and take the same trade again if necessary. And I say that in these conditions because I think these conditions are very, very important for that. Because I think there's still a lot of very good upside available for this market. There's still a lot of good upside available for alts. And a lot of people will take a trade, lose it, get scared, won't take it again, beat themselves up about it, and then beat themselves up even more when the trade they would have originally taken plays out. It's super important that you can just like dust yourself off and take the same trade again should the right setup presents itself. So it's like my thought process for Link. It's like failed Link, ETH broke out, right? Retake the trade, get back in, move in on that position. It's the same thought process. You have to just be able to kind of dust yourself off and take the same position again. And again, I'm very careful to say in these conditions, right? Because bashing your head against a brick wall, taking the same trade over and over again in other conditions isn't advised. But regardless, losing trades, everybody does it. It's fine. Figure out why you're losing trades. What's wrong? System wrong? Were you unlucky? Was your stop too tight? Etc. Best alts to long if ETH breaks out. I mean, ETH has broken out, so that side of things is done. Right? That's already a thing. I think, like, I don't know, we covered off quite a few things. I think that some of the DeFi stuff is still looking pretty good. I think stuff like Sushi looks very good because it's one of the better higher time frame charts. My thought process is mainly led by what sectors haven't yet had a substantial push. So that would be Metaverse. And what charts are the best higher time frame charts, which are things like Sushi. And so from my perspective, it's like I'm looking more into those areas because I think that these are trades that I can hold on to for longer periods of time versus trying to rotate out too soon. I think people will, and people probably already have, started rotating out of positions too soon. How do you find the balance between taking risk that has a large effect on the portfolio gain and staying conservative enough to not step into degen gambling size? Strength of conviction from the setups is the easiest way to determine that. Like, literally just get a better system that rewards you in, very good setup territory. So like, there are certain plays that I have that would occur maybe once every 6 months, maybe. And if one of those setups in terms of like range of confluence align, then I'm putting in pretty heavy risk. So the risk taking that has a large effect and the conservative element is really down to the strength of the setups that you find. And then, like, obviously mentally you're going to have to balance that off. But the mental side is also calmed by the fact that that when you get one of the great reward setups, that you'll get paid handsomely. Right? So when you have a strong system that gives you the guidelines for where you should be trading, how much risk you should be having on the table, it's easier to balance the psychology then, because you just say, well, I just wait until I get one of these great setups and then I put the risk in. FTT, no. And BNB, no. FTT is holding above 25. That's all that matters. It's a weekly level at 25. As long as FTT is above 25, it looks fine. Best time frames you use? Most success, highest strike rate is everything above the daily. Still not a spot buyer. Yeah, I don't see any issues with that at all. Like, I don't think the market is spot buyer ready. I don't see any problems. I think XRP is pretty decent. I think if it holds 34.6, breaks above 35 again, I think it's a pretty good trade. It's a pretty good trade. It's holding the right area for now. Hourly is in a really good position, RSI perspective. 4 hour can definitely go for another leg here. And then you've got the resistance at the mid 35s as well. If you get the resistance crack at the mid 35s, you're heading up to 37. So you get an easy 10%er on that. And I think it all starts around these two levels down here. Is there any relevance with the weekly RSI breakout, the 30 level from below on BTC and ETH at the moment? No, the lower time frames are kind of better for that, as in lower than the weekly. The weekly time frame we would expect to give some bounce, especially if I want the weekly bull divs. I have to get some upside to be able to form a divergence, because obviously we can't continue to sell off and expect to get divergences. Therefore, I need some rally in the market and then to rotate back down. So for now, it's just part of kind of the natural market conditions that we see. Would you mind explaining how you might strategize an entrance for Sushi, for example, using RSI? Is it generally a dip below the 50 mark and then a rise back up? Yeah, ideally. That's the ideal play. In and around that 50 area. It might not dip below, it might not touch 50, it might hit 55, but just paying attention when the market is presenting that to you. And using the awesome oscillator for confluence as well, because typically if you get a crossover bearishly and then a cross back bullishly, usually the correction's done in these sort of conditions. How do you handle being sidelined? I hate losing on the action. And FOMO like an idiot. Added to my journal to stop FOMOing if I miss trades, but it's so hard to do. I think like just keeping in mind that, you know, the market is here all the time and it puts in different conditions all the time. Whether it might not be to the long side, it might be, you know, the next trade might be to the downside, but the market is kind of always giving you opportunity for moving in and out. So don't sweat the fact that you miss like one weekend of price action or entries. Unless there's something fundamentally incorrect with the system that you're trying to trade. Apart from that, like, don't sweat it. I know it's very difficult, you know, and it's super easy for me to sit here and be like, yeah, this is what you do. It's like you just have to like ignore it and da, da, da. Like, I know it's hard psychologically to lose out on that, but I think the time is the best kind of experience you'll have in navigating through that. When you just see like move after move and you can just be comfortable with missing stuff, then things get easier. So it's really a case of time. I think this is a local or macro bottom. I think it's still a local bottom, but I think it's the best local bottom that we've seen. So I think it produces some of the best moves that we've seen for alts, but I still don't think it's the bottom. AR, yeah, I got like a really nasty higher time frame draw up for AR. Just send it straight to 25. It's such an interesting higher time frame chart. And then what really happens here is this. New question and just joined. So sorry if you already talked about it. How do you differentiate between a bullish and a bearish consolidation, especially when you see the price grinding up and RSI trending down? What we've seen on the 15-minute and the 30-minute lower time frame. Well, it's like a number of things, right? So whether or not we refer to it as a bullish or bearish consolidation depends on the trend. So if we're in an uptrend, even if we're on an uptrend on the 15-minute, then we consider it a bullish consolidation. If we're in a downtrend, we'd always consider it a bearish consolidation. The fact that we're looking for, you know, you're seeing price grinding up and RSI trending down typically indicates there's divergences, right? And so we would expect there to be some sort of impulsive downside move. That would be the first thought process. But if these consolidation regions continue to hold and the higher time frame RSIs, the hourly, the 4-hour, get brought back down to respectable midpoints, then we would be comfortable moving into the positions as kind of a sign of strength of the market. It's probably the best overview I can give. Stinky. I think these are the target regions. All right. I think you're looking for like the 735 highs here, and Stinky would be so good if it managed to break through that into the 8s. And really you're looking for kind of the 630s to hold. Link is in one of the better positions in terms of, you know, the market as a whole. How do you keep your mind clear and unbiased from the Twitter bullshit when learning how to trade? Easy to just echo what one sees on there. Close it down. Shut it down. It's the Tyler tweet, right, about internet bullying. Like, you just close it down. So the best advice is, if you are learning to trade for yourself, don't look at Twitter. You trade, you get the result of the trade, and then if you want to, you then go onto Twitter, look at the people that you respect and see what they were saying about the same period of time or the same setups. And then think about, well, what did they see that I didn't see? Or was I right? They were incorrect, right? It's the best way to do it. You think we saw capitulation? I think you can make a case for it. Like, no one's going to know if we've seen capitulation until, you know, the market rallies significantly and everything's green and everybody's feeling good about crypto again. So my thoughts kind of irrelevant. How are you feeling about the futures open? Big green. I'm saying that to see if I can influence people in chat. I think it open. I'll put my bet ahead of time. Open screen. There we go. Futures open. First 1 minute candle. Green or red. Predicting with channel points. Yeah, remember it's futures open, not... What do you mean, not BTC open? 24/7 market. You're going to get that comment very soon. Yeah, someone in chat's going to say, hey, what do you mean BTC open? It's 24/7 market. There is no open. So we're going to clarify now. We've had plenty of voting in here. Plenty of people have assigned their channel points. Plenty of people have put collateral on the line. It's time to let you know about the curse. And the newbies here, chat did a good job of keeping it quiet, suckering them in, and now they've put their points on the line and their performance. 1 week of awful trading in possibly some of the best bullish conditions that we've seen. And if you get the answer wrong, not a single trade's going to go your way. The market you think is going to pump is going to dump. There's going to be an exploit. The market you think is going to dump is going to 2x. It's going to get bought by Microsoft. This is the way that it works. The Sage doesn't work here. This is deeper than Marin. It's bigger. I was cursed last week. 60 M's I had last week. begging for the curse removal. It's impossible. Can't be done. 3 guys broke. Lost it all. Lost it all. Shorted ETH. Whole way up. Hey, good luck, everybody. Congratulations. Well done, Bulls. And listen, this week I gave my prediction ahead of time. So you can't even say that I'm LARPing about this one, huh? Ah, look at BTC as well. You just couldn't wait. Couldn't wait. Alright. A big thank you for joining me. It's always a pleasure to do this stream. So a big thank you to everybody for hanging around. Big thank you for all the follows, subs, gifted subs, chat, questions. Whether or not you agree or disagree on the analysis. Always good to have different viewpoints, different thoughts, and different minds here. It's absolutely a pleasure every week. So this week I'll be back midweek. I'm not sure what day. We'll come in maybe Wednesday, Thursday, somewhere around there. We'll see how the market develops. I think it looks really nice. Like, I think the market looks good. I think that the ETH breakout is significant. If it falls back under the level, short it to zero. You know, it's a very, very simple market environment right now, as long as ETH holds above that level. It's exactly the same way that we had at 45,000. It was exactly the same level as the BTC breakout at 45,000. Far more significant for BTC back up at 45,000, but the play was to short it once it dropped back below that significant level. And I think the same will be for ETH here. So everybody, have a wonderful week. Good luck out there trading. I will be back midweek, and enjoy the rest of your weekend. Start your week until then.